Welcome to the update of the Federal Milk Marketing Order 33, provided by Nobis Agri Science in combination with Balchem. And this is Dr. Lawrence Jones, and I'm recording this on February 21st, 2023. Now, I thought where we would start is kind of the big picture because I think we're at the kind of the bottom of prices for a while. We had some very good prices back here, earlier in the year. And then I think March is going to be our low. And so that's going to be, significantly lower from where we were. And then kind of trend up after that. And again, for the big picture, if we look at 2023 prices, we're probably about $4 below 2022. So we're using this 50-50 blend to calculate that, but just take whatever your income was in 2022 and take $4 a hundredweight off that. And you're going to be pretty close, I think. So let's look at where we're headed. So this starts out in February because we're just about to close that out. And you can see a nice upward trend. Now, the way you read this graph is these lower dots is the low that we've had during the last 12 months. These are the highs that we've seen. The blue is last week and the red is this week because we were down about 26 cents. So we ended up that last week about 26 cents lower on overall futures than we were the week before. So let's start with your statistical uniform prices that just came out. $20.82, that's 91 cents lower than December at 21.81. And so we've had that really nice run up and then kind of this run down. So we just put this in the context of the bigger picture. Again, you guys are 20.82, and that's pretty well in line what I would call the mid and west section. New York is 21.86, and again, you have to make sure we compare these appropriately because it's not that New York has $1 higher milk price than yours, but they add more at the location and then subtract $1 away at the county, and where you guys don't do that. So they turn out to be very similar. What's most important is how things changed this last month. Again, you guys are down 99 cents, and again, the Northeast down $1.20. And what's driving this in these different regions is the fact that Class 3 came down $1.07. And again, you see Minnesota, Wisconsin came down $1.05. They're very high Class 3, so you we expect that. And then Class 4 came down a whopping $2.11. And the thing that kind of drives this for your area is the percent utilization of milk. And so you are 31% fluid, 48% Class 3, and only about 9% Class 4. Now that's because you have been historically depooling Class 4, but you actually depooled a little bit less this month that we'll see here in just a minute. Along that line, I built this graph now to look at how Class 4 changed with different regions. And so you guys had 4% more Class 4 this month than last month. And you can see, California significantly quit depooling. The Northwest was depooling but came up 7%. It's not that any more milk was made or went anywhere else. It's just that they put it into the pool versus out of the pool. And so if we look at your numbers, this month you're at 8.9%, and last month you were at 4.6%. Now, because these are both 31-day months, it's easy to compare. You had about 63 million pounds of Class 4 last month and 132 million this month, while Class 1 was pretty, similar, 545 million versus 548 million. So again, you depooled less. So those of you that in co-ops that had been depooling, you won't get that co-op check this month like you had in the past. And historically, your numbers go all over the board. And so the order has been, some points depooling a little. So sometimes you don't depool at all and you end up with 26.5% Class 4. And that's probably that high because you were depooling Class 3. So again, this is simply to show how much depooling goes on in Order 33, which is very active. If we look at percent fat, that was 411 for this month. down just a smidgen from last year. We were about 414, and so you can see it just came off of that peak just a little bit. And if we look at protein, again, we're down from last year. We're 324 this year, 334, and we came down quite a bit in that January time frame. Now this is interesting. Last month, if you go back and look at it, I gave you this graph here, which I told you that you would not be depooling after March because class 3 was going to be higher than class 4. I mean, look how this has changed now to this month. And it's not so much that class 3 changed, because if you look in March, this was at 18, and March we're a little bit below, but most importantly, class 4 went up quite a bit. So that's kind of been the change, and so it has been a change in landscape as terms of these prices. So class 3 was, as I said, 1943. It came down $1.07, and so what I do is I go now and say what brought that down, so we can kind of see what's going on in the industry. And 76 cents of that was cheese, so a major part of that. Now, butter and whey did not do any favors. They also lost, 18 and 13. And you're going to see where this kind of settles out here with March being the lowest. And then this is that kind of blowing up as to what's going to happen in the future, because class 3 came down 22 cents. And this March is probably going to be the low. Things are starting to pick up here a little bit on the futures market today, but this is as of Friday. So we want to look at how we're going to get to this price. So again, we're going to class 4 at about $20 in September, class 3 just a little under. And we go back and look at that here, that's these numbers in here for class 3. So my question is, how are we going to get there? So to get there, we need $2 cheese, 43-cent whey, 2.53 butter, and $1.34 non-fat dry milk. And my question is, how realistic are these numbers? And again, you got to remember, that's all math. They're just USDA formulas that if we have these values, these are the class 3 and class 4 prices that we'll get. All right, so let's start with cheese, where 203 is what we need. And right now, we're on a trend line down. We've hit a support here at about $1.72. We've been kind of bopping around there, but it did pop up today a fair amount. So hopefully we can get that up. But this has a long lift to do between now and September. We're going to need 30 cents in cheese prices if we're going to make those numbers that we've been watching here. The real issue and what's going on in the cheese market is the barrels. So barrels are in red, blocks are in blue. We went through a time period here where barrels were a lot more valuable than blocks, and then it all changed here, about November, end of October, and barrels have just been widening out. And right now there seems to be quite a excess supply of barrels, and the export seems to be going down, but we've got to get this barrel market up. So if you want to watch one thing in the industry in the next little while, that's what happens with barrels. If we can get those up to about $1.70, then we're going to be home free with these higher prices. If we can't budge them out of that $1.60, then we're going to be in trouble. To make matters even worse here, this is the last National Dairy Sales Report. And just kind of remember that the way this comes together, that was the weighted price for blocks, and we sold about 11.7 million pounds of them. Here were the barrels, $1.67, but there were 14.9 million pounds of these. So this is weighted a lot heavier. And so I've got this little cartoon here. These barrels are kind of a weight around overall prices, because until we can get these barrels up and we get the sales to be more even, then we're going to constantly have a low cheese price. If we look at how cheese price impacts protein prices, right now we're at 281, and this is going to come down. This is up from where we were back September at $1.88, and obviously quite a bit lower than we were back in the spring when we had those really good prices. And we look at the futures contracts, they came down 7 cents this last week. We're at the lows that we've seen in these contracts. My benchmark number is $3 on this. That's kind of when every everything kind of comes together nicely, and we're going to be below 3 probably all the way through 2023 here. Spot whey we need, at 43 cents. We're basically right there right now. So whey is in line with what we need to get those higher prices, so no problem there. Butter's also been coming up, and we need 253 for September. We're in that 240 kind of number. So there's plenty of opportunity for butter to get up to that 253. And so what's happened with the fat prices through all of this is we're at 277 this month. We're off of that 366. So we've seen, a nice run up when butter was high, kind of a run down as butter got a bit cheaper. It's going to be fairly stable for the next little while, and then hopefully pop up. And here are the prices in the futures contracts. It came down to a penny this week, but we're close to the highs. We're not quite on the highs, but we're in that range of the highs, and this does definitely have an upward trend to it. All right, so let's look at class 4. It came down $2.11. We're at 20.01. And if we look at that, that's $1.34 of that is from butter, and 77 cents of that is due to non-fat dry milk. Normally, movements are basically cheese and non-fat dry milk, but on this class 4 price from this 25.83 and this $2 drop this month is very heavily influenced by butter. So again, let's remind ourselves that we need 253 and $1.34. And we saw this just a minute ago that butter was at 253, so butter is looking good even for class 4. And the thing about butter is the stocks are very seasonal, and what I have here is the butter stocks with these red dots being January. And what I did this for is we are way down from where we were, and the current month we should have the milk production report tomorrow, and I'm projecting a number that's quite a bit higher than we're at, but we're pretty low. And so we've been low in butter stocks, and so I think butter has the possibility of supporting that higher price that we're looking at. The non-fat dry milk is, we need $1.34. We're pretty close to that right now. We've been on a downward trend. We did just get the global dairy trade, which I'll show you in a second. It was down just a smidgen for non-fat dry milk this week. But again, I think non-fat dry milk is not going to be a problem making those prices. It's all going to be cheese that we've got to kind of keep an eye on. So here is the global dairy trade, and this is always kind of an interesting little exercise. We're down 1.5%. So you're going to say, man, prices dropped. They were up and then they came down. But if you put this into US dollars and you only consider the ones that, kind of impact our milk prices, it turns out, it kind of was up 30 cents. Because one of the things that was down quite a bit was this whole milk powder, and we just don't even participate in that. That's $1.48 a pound, which would put the world price at $14.82. So that is just something that really doesn't impact us, overall. But butter was up, cheddar was up, skim milk powder was down just a little bit. I mean, non-fat dry milk lost 3 cents. Cheddar gained 5 cents, and butter was up 8 cents. So overall, I would say that this was a positive global dairy trade auction. Now, you've probably been hearing a lot about slaughter numbers, saying, there's a huge increase of slaughter numbers. And, generally, I like to see between 57 and 62,000. We had one point here that I thought was just up because we had holidays here, and it was just some making up of slaughter numbers. But then we ended up with these 3 high ones and then coming back down. But the big issue with that is at the 65,000, 1,900 of those are in the region 6, which is New Mexico, Texas, and 2,300 of those are in Arizona and California. So this is very regional. And so we look at this chart here. You guys are in the central region, and you were up for a little while. Again, at 13,800 is typical. So that was what you had in the middle of December, and that gave us 60,000 total. You went up to 16 for just a little bit, but you're right back to that 13.8. So your region is calling just as typically as you would for a 60,000 total number. It's Arizona, California, Oregon, and Washington. Even Oregon and Washington has kind of come back this week. So the way I read these slaughter numbers, and if we go back to this slide here, is it's not that it was an industry trend that we were culling a bunch of cows because of one reason or another, but it was very regional, and I think it was partly based on some water issues, some feed issues, some storm issues. So these are the next 12 months, week over week. And so there wasn't much movement, but you can see that soybean meal has really come up quite a bit. And I'll show you that in a minute. And the biggest issue is, like last week, our protein energy index, which is 8 pounds of cornmeal, 8 pounds of soybean meal is all that is. Didn't change very much, but our 50-50 blend milk price came down 23 cents. And so our margin came down about 18 cents a cow. And so the tightening of the margin right now is probably more with milk price coming down than feed costs going up. But if we look at these rolling 12-month averages, corn just has not moved. It's been in 220, 240 trading range per ton, for quite a while now. Soybean meal is another issue. That popped up on that EPA report saying that we're not going to get into biofuels quite as much as we thought we were. Then there's some weather premium, and then it even popped up further today just because of this freeze in Argentina, which really probably is not going to turn out to be anything, but it moved the market a fair amount today. Okay, just a couple things we need to keep our eye on. So this is Brazil, and I stole this from Sean Hackett's report, but I've seen it, several different places right now. The Brazil corn planting is pretty far behind second crop of where it normally is, and the reason is the soybean harvest is behind, and until you get the soybeans off, you can't get the corn in, and this is the crop that they largely export. So we're going to have to keep an eye as to whether this becomes a much smaller crop and if that's going to have an impact on overall supply and demand numbers. Now the other thing I'm really keeping an eye on is this polar vortex. Now, if you remember, the polar vortex should be centered somewhere, right over the North Pole. And it should just be a nice round cyclone, basically. But this has been pushed way off to the other side of the globe. And when this thing comes rolling back, there's a possibility that we're going to have significant intrusion of cold air into much of the northern hemisphere. So we really have to keep an eye on this. And it's going to basically be related to wheat. If this comes out, the middle to end of March in the wheat area that's coming out of dormancy without snow cover, that's going to be horrible, as well as the wheat that's over in Russia and Ukraine, and it's probably not planted much in Ukraine, but particularly in Russia, same sort of thing. If their wheat's coming out of dormancy when this polar vortex hits, it will significantly impact the wheat crop. Now the other is this resilient drought. There's still a huge amount of dryness in the central region here, but if we look at Michigan, it looks like the northern part in particular has got a lot of moisture. It might be just a little droughty here in the lower end and the thumb. All right, so I'm just going to finish up with this graph. This is basically low sulfur diesel, because there's been a lot of talk about this going up to $4. I think I've kind of commented before that we got to keep an eye on this. I've drew this downward channel, so it doesn't seem to be going in an upward direction, but with what's going on with the Black Sea issues and Russia and Ukraine, there's probably more upside than downside of this. So if you're in this 270 range and could lock in some heating oil, I think that's something you got to really take a look at. And again, when I talk about heating oil, that's on farm diesel because it's the same low sulfur diesel. All right, well, that's it for me, and I hope that was useful. And so I'll get you another report next month.